Good afternoon. We're getting right down to business here, doing it live, doing more at 4 every weekday afternoon, right after Guy Benson and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com. And yes, the on-demand Mottek On Money podcast at kbc.com, Apple, iTunes, YouTube, all of your favorite podcast platforms. Stocks pulling back from the recent rally today amid concerns that investor relief over a cooling in trade relations and U.S. inflation might be misplaced at the moment. As Yahoo Finance is reporting, the Dow Jones Industrial Average reacting by moving lower today, mostly because of Home Depot's mixed earnings report today. The Dow closing down 115 points at 42,677. The S&P 500 down 23 at 5,941. And the NASDAQ down 73 points at 19,143. Looks like the S&P 500 and NASDAQ each broke six-day winning streaks. The VIX index, the volatility index, slipping slightly, down a quarter of a percentage point today. Gold higher by nearly $16 here at the moment, back to $3,300.20. Crude oil still in the low 60s, right now just below $63 a barrel. Since the U.S. and China struck a deal to temporarily roll back tariffs over the past week or so, the markets have been shaking off fears of a trade war and enjoying a rally. Today we heard from the St. Louis Fed president, said tariffs could still cause a significant, in his word, impact despite the latest U.S.-China trade reprieve. We'll be talking more about China later this hour with China expert Gordon Chang. Home Depot's results, earnings news today in focus for more clues as to the Trump tariff fallout after Walmart warned this past week that it'll have to push up prices. Home Depot's profit falling short of analysts' expectations. Meanwhile, the president's tax bill continues to face challenges as this drama continues in Washington. President Trump today went to Capitol Hill looking to reassure and also get more votes for the bill, looking to boost the cap on the state and local tax deductions. The president dimmed the hopes of some Republicans today when he swiped at their efforts to raise the cap on state and local tax deductions, warning that doing so would, in his words, benefit Democratic governors, who he says are destroying our country. Google also in focus, unveiling some of its latest AI developments at a conference today, bringing in some new features. Google teaming up with Warby Parker, the eyeglass maker, and Gentle Monsters to develop AI-powered smart glasses. Remember Google Glass years ago, which didn't go over too well? This move now putting Google in direct competition with Meta, which already offers its own Ray-Ban Meta AI-powered glasses, and Apple also working on its own smart glasses. Big merger deal in the news today. One of the top stories at the top of the hour, as you may have heard, Levi Strauss agreeing to sell Dockers to brand management firm Authentic Brands Group in a deal valued at $311 million. The denim maker said it was considering selling Dockers in October as it looked to focus on its namesake banner and growing direct sales. Uber joining a list of companies making record highs. Also on that list this week, Netflix, IBM, Visa, MasterCard, Booking Holdings, all hitting record highs this week. And Tesla has had a good week or so, with the shares up about 43% over the past month. China cutting its benchmark lending rates for the first time since October today. Meanwhile, China's defense industry in focus following the skirmish between India and Pakistan. We are taking a closer look at that, as well as Chinese intelligence operative posing as a Stanford University student has been uncovered, according to a report by the student newspaper Stanford Review. I will discuss the latest China news with China expert Gordon Chang, distinguished senior fellow at the Gatestone Institute, author of numerous books, including The Coming Collapse of China, The Great U.S.-China Tech War. His latest book is titled Plan Red, China's Project to Destroy America. In Sacramento, Governor Newsom now proposing scaling back state-paid Medi-Cal benefits for illegal aliens in the state. I'll discuss the latest news on that with Ira Melman, spokesman for the Federation for American Immigration Reform, FAIR. But first, on your money, the markets, the economy, crypto, the whole works now. Joining us live, investment strategist and veteran portfolio manager Bryan Perry at BryanPerryInvesting.com, senior editor at Eagle Financial Publications and author of the 25% Cash Machine. Bryan Perry, thank you very much for taking the call here this afternoon.
Very good to be with you, Frank. And the market had paused today, after 6 straight sessions here of up prices. And for a multiple of reasons here, you've had a lot of really good news getting priced into the market coming into today. Friday was actually a very strong day, despite the fact that Moody's, today was, despite the fact that Moody's after the close had downgraded U.S. debt, to fall in line with S&P and Fitch, one notch below AAA. Normally, that would have caused a much bigger sell-off than what we saw today. But that was kind of expected along the lines of within the bond, trading pits, and at some point that was, going to be priced in, and it was. What we're seeing, though, is bond yields are back up here toward the high end of the range, and it's got a lot of people nervous about whether or not the Fed can do anything about that, which they probably can on the long end of the curve. And where that leads us here is to whether the downgrade in Moody's plus these other factors that are in play right now with the tariffs are going to cause the number one concern is stagflation, and whether we're going to see higher prices from tariffs, accompanied with slower growth. And that's got the market here kind of wondering whether we should sell into strength. That's really what's going on here. And coming into the month of June, which begins the summer months here, a lot of the traders and big fund managers and all, they're off to the Hamptons. And, the market generally doesn't drift higher. It generally drifts lower when there's less activity going on. So if there's less engagement, then you tend to see the market, fade. And so therefore, we're back in that mode here. The dollar's been, again, it had a nice little bump higher, but now it's drifting lower here because of this downgrade by Moody's, which has gold back on the up and up. And therefore, you've got the same set of conditions that are developing before. At the same time, you saw a rotation today, which is very interesting, even though you saw, bond rates move higher and gold move higher and the dollar move lower. You saw a move back into defensive sectors here, utilities, defensive names like Kroger, healthcare names like Johnson & Johnson, against a negative tape. So what is that saying to us here? It just generally says that we're on the front end here where, the 90-day reprieve on the tariffs, that expires around August 7th or 8th. Yet the market's already sensing that there's going to be pressure on prices regardless of how this all plays out, probably to the tune of 20-30% on Chinese imports and 10% plus on European, which that has not been worked out, and other countries out there. So even though the market's had this euphoric moment of wanting to believe that everything's going to be just fine, especially after this Trump tour overseas where they raised nearly $1 trillion in new commitments from the Middle East, the market's a forward, discounting pricing mechanism, and it's priced all this in at this point in time, and we're right up against the 6,000 level here on the S&P 500, which was a major breakdown point technically. So all the technicians out in the world, Frank, are looking at this level here as like, well, do I sell into this, newsworthy, technical, rich move here, and or sell a lot of covered calls against it? Do I put my stops in? So right now we have an overbought market that a lot of people are wondering, well, what's the next set of catalysts? And that's either going to be macro geopolitical, which is like a deal with Iran on de-escalating nuclear capabilities, and or a peace agreement between Russia and Ukraine. But most of their economic things, I think, are priced into the market. So it's a good time for people to maybe consider, being protective of their gains.
On there live with investment expert BRYAN Perry, and certainly Home Depot took the spotlight today. BRYAN, the retailer, said it does not plan to raise prices due to tariffs, unlike what Walmart said about a week ago, and then they kind of pulled back on those comments. But what are we to make of what Home Depot had to say and the state of the economy, the consumer? The stock, by the way, did move a bit lower today on this news, down more than $2 at $377 and change.
Sure. Initially moved higher, in the front end of the market here. It was up $4 or $5, and it looked good on the way. And I was like, okay, we're going to hold it, and we're going to absorb that. But it was a kind of a shot across the bow, Frank, because it just says that tariffs are a real thing. We're going to absorb it here. We're going to squeeze our margins. And who else said that today? Viking Cruises, right? Viking. They beat the numbers on the top and bottom line. They guided, but they said, our margins going forward are going to be thinner, and that stock closed down. All the travel stocks closed lower because it was like, okay, we got to maintain the top line. However, we're gonna have to absorb some of this cost here because it's simply we got to maintain revenues. And Walmart said we're going to pass this on, and the stock kind of held in better actually because they said it is what it is. Whereas other companies here are going to say that our profit margin is going to be, and the market absorbed that here from the standpoint of like, well, if Home Depot and Walmart are saying this and Viking's saying this, then this is just the beginning of a trend, and you look for a pattern in any of these types of situations here, and it's just now starting to kind of work its way into the larger, bigger macro picture here about what tariffs are going to mean if in fact they exist even at these lower, reciprocated levels here. So I'm of the view that the market's going to start to price in this, and it could involve just a sideways price action to a back and filling type of consolidation action here, and it's really up to people whether they want to be, go through that and take some powder off the table, or just know that longer term the stock market usually resolves of these issues and works higher. But you also got this bill coming through with the market here that has a lot to do with the sentiment as well, whether or not it's just going to add a lot of debt to the larger, greater elephant in the room, the $37 trillion deficit, and whether or not we're going to be able to prosper our way out of it without some kind of a deficit reduction plan. Frank.
On the Live with Bryan Perry, veteran portfolio manager and investment strategist, BryanPerryInvesting.com. And Bryan, you mentioned analog gold moving up back above 3,300 an ounce today. What about digital gold? Bitcoin has seen an impressive run-up, pulling back a bit right now, down about 600 at 106,376, getting close to its all-time high here today. What do you make of this move here?
Great stuff happening here in the Bitcoin circle, Frank. Major developments in Bitcoin regulation recently, especially in the U.S. here. The new Genius Act, advances through the Senate here, which passed 66 to 32 vote, I guess, is what, something like that, and it moves to the House for review. This aims to regulate stablecoins, which requiring issuers to maintain one-to-one reserves and comply with anti-laundering efforts. And Trump's executive order on Bitcoin, which is to create a strategic Bitcoin reserve funded with seized Bitcoin from criminal cases also. So this has kind of been a long-held term, solution to the criminality in the Bitcoin space here. And the SEC's crypto oversight shift, they've really started to step it up here. They reorganized their crypto enforcement efforts, forming what is called the Crypto and Emerging Technology Unit to focus on long-term rulemaking rather than just aggressive prosecution. So there's a lot of regulation here, which I've talked about for many weeks here, about how Bitcoin, the more regulated it is, the more you're going to invite institutional investors to enter the market, increasing liquidity and regulatory clarity here, which makes Bitcoin that much more of a stable and a storehouse of wealth and an inflation hedge that can start to trade more in parallel with gold as opposed to just a risk-on investment.
Excellent, and very important. The Senate voting 66 to 22, I believe it was, to advance this Genius Act, which aims to regulate some cryptocurrencies, bringing some clarity to the regulatory world as far as cryptos are concerned. And at this point, Bryan Perry, let me ask you the big question here, and I know you always put a lot of thought into this. Any specific places where you are putting money now and or taking it off the table?
Well, you have to ask what lies ahead here, and you've got NVIDIA earnings coming up here on May 28th. Okay, that's just larger than huge for the market in general here, and a lot's been built into their expectations here, and expect the stock each time has reported has sold off, but I think this time it actually may hold its water and trade higher here. Tesla here, Elon Musk gave a great interview today talking about robo-taxi being launched in June. The stock's made a big move higher here. I think it's going to be a home run, the rollout of the robotaxi. But by and large here, people should take a look at, while rates are up here, inflation is moving down, and I think that this is a good time to maybe look at rocket companies here, RKT, the largest mortgage investor. Used to be Quicken Loans. They just bought Mr. Cooper, which is a very large servicing company here, as well as Redfin, major real estate company here. So RKT down here at $13 looks like really good. And the big activists just moved in on the stock too. Super Microcomputer here just got hammered here in the last year. A big seller of cooling servers here for data centers here, SMCI, trading around 45. A lot of big upgrades. Got a huge deal with the Saudi deal here going overseas, along with AMD, Advanced Micro Devices. Those stocks have been hit really hard, well off their highs, like 35-40% off their highs. Good time to look at those. Berkshire Hathaway here pulled back from 550 to 505. Take a look there. LNG, Cheniere Energy, largest exporter of U.S. liquefied natural gas in the world here, coming out of a major base here, looks really strong. Also, SoFi, right in your backyard, Frank. SoFi Technologies here, name brand on the stadium there. A great online bank here, ran up to 15, 16 here on earnings here, pulled back to 13, looks like a buy. And then certainly you got to look at Strategy, which used to be MicroStrategy here, which is Michael Saylor's, holding company for Bitcoin here, MSTR. Looks like it's ready to vault higher here with Bitcoin in general. Coming off, simply, it's a blanket trade here on travel here. Travel's going to have to squeeze their numbers here to make their numbers. And so I think that the margins are going to come down and the revenues will be fine, but profits are going to fall. So I would fade that travel trade.
Very interesting. What about the shipping stocks in this environment? Some have mentioned the shipping stocks here. They've bounced back following the Liberation Day tariff announcement. What are your thoughts about the shippers here?
That's one of the trickiest sectors to trade, Frank, because most of them trade on what they call spot pricing, spot charters here, where it's daily rates. Very few companies have what they call long-term charters. That used to be a much easier industry to predict, even 2-3 years ago. But and again, it's all about boats in terms of how many boats are building versus how many are on the fleet. And it's not hard to build a lot of these boats anymore. These big shippings coming out of Hong Kong and China here. So I don't really try to make that call here. Some of them pay really good dividends here, but they're extremely volatile.
Actor Michael Rosenbaum, he knows some of the most talented people in the business.
Will Wheaton is here.
I'm getting ready to do this podcast. I text my Star Trek family. That is a supernatural impulse.
If you're here for Jay Moore, you found the right place.
Have you always had a large personality?
The nicest way anybody's ever put it. You always warn people out.
From Twilight, Ashley Green.
We were just like, no one's going to see this. This is not going to be a good movie.
I really love the movies.
Don't feel bad.
The Inside of You podcast. Follow and listen on your favorite platform.
And the spot rates right now are pretty good, but again, with tariffs coming into play, that business, you're betting against what could be a negative downturn for shipping going forward here. If in fact that China and Europe and the rest of the world doesn't completely comply on having a kumbaya moment here in the tariff world. And I think that as we head in toward the deadline, Frank, that some of these tariffs are going to be sticky. It takes months to work out these tariffs, and I just think that 90 days either going to have to extend them or they're going to be some real nervousness there, and I would just avoid the shipping sector altogether personally.
All right, and on the bond market, with those yields moving up again this week, the yield on the 10-year note last check back down to 4.49%. Yesterday we saw mortgage rates get a pop with those yields moving higher. What do you see ahead on that front, and at what yield do you think would be the breaking point to maybe throttle back on some of the hardline tariff announcements here?
Well, I think that the White House, Scott Bessent and these guys, the Treasury Secretary, they're watching this very closely here. When we breach 4.5 on the 10-year and 5% on the 30-year, that becomes a super talking point, in the inner circles. Seeing that breach above that, because there is really no debt reconciliation, with this big beautiful bill coming through here. They haven't talked about how they're going to pay for it. And the bond market doesn't believe that prosperity gets it done. It believes in prosperity plus major spending cuts, and we just haven't learned how to do that yet at the congressional level here. So the bond market is, the bond market trades on fear and the stock market trades on greed, and right now the bond market is fearful that the spending that has gotten everybody reelected all these years is going to continue to persist, and without some form of fiscal discipline, which we all voted for if you're in the Trump camp. We wanted fiscal discipline to be a big part of the discussion here, and now it's being seen as like, well, we'll just make so much money from tariffs and prosperity that it'll pay for it all. The bond market doesn't believe that, Frank, and until there's some real hardcore spending decisions here made at a number of levels here, then I think that we're still kind of out there wondering whether or not the bond market could. And if it breaches, if the 10-year breaches 5%, that'll be real trouble for the stock market. So people have an idea of where there's a tipping point.
All right. So, would you be making any adjustments to any bond ETFs or anything related to bonds in this environment?
Yes, you want to shorten up your durations here. If you're out there in bond heaven, meaning 10 years to 20 years to 30 years, then, at this point in time here, if you see the 10-year, breach 4.5 and the 30-year breach 5%, then you want to be, selling your long-term bonds and then buying your short-term bonds inside what they call the belly of the curve. That's inside 7 years or less, where there's actually, you got a maturity range that's in sight where there's going to be little, if any, price action at all. Simply because that's really, you're going to see huge institutional money flows on the short end.
Bryan, thank you very much for that thorough analysis. As always great to speak with you. That is Bryan Perry, investment strategist and veteran portfolio manager, BryanPerryInvesting.com, senior editor at Eagle Financial Publications, author of the 25% Cash Machine. Bryan, thanks again for coming to the line this afternoon.
Always great, Frank. Have a great weekend. Thank you.
You too. Thank you very, very much. And out to the freeways we go now on 790 KBC. Mottek On Money continues, 790 KBC. Stocks pulling back with the NASDAQ and S&P 500 snapping six-day winning streaks. The Dow came in for a closing loss of 115 points at 42,677. S&P 500 down 23 at 5,941. And the NASDAQ down 73 points at 19,143. The VIX index, the volatility index, pulling back slightly today, down about 0.25% of a point. We did see gold move higher today, back above $3,300 an ounce, right now at $3,300.20 an ounce. Silver is hovering at $33.33 an ounce here at the moment. Home Depot, with its earnings news, pulling back today, down $2.33 at $377.05 a share. Tesla on the rise at nearly $2 at $3.43 and change. Taking a look at Bitcoin now, pulling back about 600 here at the moment at 106,376. Ethereum hovering at around 2,522. Doge at the moment at 22 cents. And now the latest news on 790 KBC. Mottek On Money continues, 790 KBC. California facing a $12 billion budget deficit. Governor Newsom last week making that announcement. Also announcing that they'll be scaling back state-paid Medi-Cal benefits for illegal aliens. Starting last year, Medi-Cal became available to all illegal immigrants in California, and that's part of the reason the large number of recipients is that since 2016, California has been continuously expanding coverage for the undocumented. Governor Newsom, though, claims California is under assault from Washington and that a Trump slump from tariffs and other federal policies will cause its fiscal shortfall. But indeed, Governor Newsom now proposing scaling back state-paid Medi-Cal benefits for illegal aliens. Joining us live now is Ira Melman, spokesman for the Federation for American Immigration Reform, also known as FAIR. Ira Melman, thank you so much for joining us live here this afternoon.
Thank you very much.
It's been a while since we've chatted behind live microphones, Ira, so give us your reaction to what's the announcement this past week from Governor Newsom.
Well, look, I mean, there are two possibilities here. Number one, he legitimately is, as you mentioned, grappling with a $12 billion shortfall when it comes to the state budget. Right now, the state of California is spending about $8.5 billion a year to provide Medi-Cal for low-income illegal aliens. There are about 1.6 million illegal aliens in California who are getting free medical care on the taxpayers' back. The other consideration, obviously, is his own political future. You know, he's not going to be governor of California for much longer. He's thinking about running for president. These sorts of policies don't play well in the rest of the country. But, you know, regardless of what is motivating him, it's the right thing to do. California taxpayers should not be saddled with these huge costs to provide health care to illegal immigrants. It just attracts more people to come to California and take advantage of these programs. So, you know, whatever motivated him to do it, he is trying to do the right thing. Now it's up to the state legislature to do what Governor Newsom is suggesting that they do. You know, that's going to be a much heavier lift.
On the live with Ira Melman from FAIR. And Ira, what do you think the end result of this will be here? for years, it was almost politically incorrect to point out the billions in spending on these social programs for non-citizens. Let's put it that way. Under Governor Pete Wilson, for example, there was a lot of attention brought on this. And so have times changed now?
Times have changed. You go back to 1994 when voters passed Proposition 187 to cut off most benefits. Since then, you've had successive governors add new benefits to illegal aliens, and California is now in a position where 3.2 million people are living there illegally, most of them accepting some form of public assistance to live there. It's really going to be up to the voters. The people that they have elected, whether it's to the legislature or to the governor's office, these are the people who have been making these decisions. It really, like anything else in a democracy, it comes down to the voters, who they decide to put in office. And if they're not doing the job that they're supposed to be doing, not serving the interest of the people of California, then the voters need to find new representatives.
How long have you been with the Federation for American Immigration Reform?
Probably around 20 years. So it's I've seen a lot of stuff happen in California and around the rest of the nation.
Right. I seem to think it's been even longer than that. Right? We've been having these conversations for many, many years. So what you're talking about here. So what other programs are getting scrutiny these days, given the state's dire financial situation and indeed the city of Los Angeles' dire financial situation?
Well, like they all should be under review. California has a panoply of benefit programs that they make available to illegal immigrants, whether it's in-state tuition benefits for people who want to attend the University of California system, which also, by the way, every time you admit an illegal alien, somebody else isn't getting in. So your kid may have to go spend $80,000 a year for a college education. Housing benefits. If there's a benefit to give to illegal aliens, California has probably already done it. Now it's time to start scaling back. Governor Newsom, he's recognized a huge expense, $8.5 billion for Medi-Cal subsidies for illegal aliens. That's a good place to start. But you can go down the list, item after item, whether it's at the state level, whether it's Los Angeles County, Los Angeles City. There are plenty of places where they can cut back. And look, you look at what's happened in California over the past few months, the devastation of the fires. There's going to be a lot of other things that are needed to be done on behalf of the citizens, and that money could be put to use for those purposes.
How do you feel about the DOGE effort under Elon Musk when what's happening in Washington with certainly taking a broader look at all these programs?
Well, we certainly look at the immigration related ones. They're going after the sanctuary cities now and sanctuary jurisdictions. In fact, the entire state of California is one giant sanctuary for illegal aliens. And, they are threatening to cut off certain funds to the state and local governments that refuse to do anything. In fact, not only refuse to do anything, actually encourage illegal immigration. You should not be getting federal dollars from taxpayers in other states in order to spend it on illegal aliens. So those are, when it comes to immigration matters, that's one of the things that DOGE has been looking at. Well, Elon Musk says he's kind of wrapping up his time there in the administration. We'll see what they come up with. But certainly, taxpayers in the rest of the country should not be subsidizing the profligate spending of California money on illegal aliens.
And it should be noted what Governor Newsom is talking about is starting next year. California is proposing will stop enrolling new illegal aliens over the age of 19 in the Medi-Cal program and will begin charging those who are already enrolled a monthly premium of $100 beginning in 2027. So that's what's on the table here at the moment.
Yeah, and as it has to be ratified by the state legislature. We know where the California legislature stands on this. The leaders of both the Assembly and the Senate have said they're dead set against it. So it's going to be a fight. But he has to make the case to the people of California. I can't imagine there is a huge constituency in California for providing these lavish benefits at a time when the state can't meet its basic expenses, when they're probably going to have to go out and tax people more to make up that $12 billion that the state is missing. So this is a great opportunity. You know, he can demonstrate not just to the people of California, but if he's thinking of national office, that he's willing to take on these special interests that support illegal aliens at the expense of American citizens. So it really is up to him. It's going to be up to the state legislature. But, you know, these are the people that voters put in place.
Ira, thank you very much for that thorough explanation and reaction to the big news there in Sacramento. Ira Melman, spokesman for the Federation for American Immigration Reform, also known as FAIR. Great speaking with you. Thank you very much for taking the call here this afternoon.
Pleasure. Thanks.
And out to the freeways now, 790 KBC. Frank Mottek here for United Gold Group. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Well, now with the U.S. debt at more than $36 trillion and climbing, a possible recession on the horizon, and the development of the digital dollar, central bank digital currency, it's more critical now than ever before to safeguard your assets like your cash savings and retirement accounts with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Tune in this Saturday at 8 a.m. to hear me interview Dave. He's the boss at United Gold Group, and you'll learn a lot about how to invest in gold. Or give my friends at United Gold Group a call right now at 800-753-8534. Again, that's 800-753-8534. Mention Frank Mottek, and you could get $1,000 worth of silver with a qualifying purchase. 800-753-8534 or visit UnitedGoldGroup.com. Mottek On Money continues here, 790 KBC. The China-U.S. trade war on pause for the moment, but that will expire in August after a 90-day pause. China, meanwhile, trying to pump up its economy, cutting its benchmark lending rates for the first time since last October today. Meanwhile, China's defense industry getting new attention. Some Chinese equipment used in the skirmish between India and Pakistan, with the Chinese fighter jets prevailing against some of the Indian Air Force jets. Also, a Chinese intelligence operative posing as a Stanford University student has reportedly been uncovered following an investigation into suspicious approaches made to students conducting China-related research. That, according to the Stanford Review, which is a student-run newspaper on the Stanford campus. Joining us live now to discuss all this is China expert Gordon Chang, distinguished senior fellow at the Gatestone Institute, author of numerous books, including his latest, Plan Red, China's Project to Destroy America. Gordon Chang, thank you very much for taking the call here this afternoon.
Oh, well, thank you, Frank.
All right. First of all, on the trade situation, give us your current view of what's playing out here.
Well, I think the Chinese got the better of the trade agreement that was announced last Monday for a number of reasons. But what has really been disturbing is that China has already violated its promises.
Searching for an inside look at the people, stories, and passion that fuel the state of soccer in America, the United States Soccer Federation will be launching the all-new U.S. Soccer Podcast. Episodes will go beyond the field with players, coaches, and legends to bring you honest conversations and untold stories. This is where soccer will come to life. The U.S. Soccer Podcast. Follow and listen on your favorite platforms.
It promised to get rid of the non-tariff barriers that were put in place after April 2nd. China did not do that with regard to its embargo of rare earth minerals to the United States, which was put in place on April 4th. And the Trump administration has yet to respond to that. But clearly the Chinese have no intention of honoring their promises to the United States. And now it's up to the Trump administration to, I think, impose some costs on China for a clear violation of the deal.
All right. Today, the Chinese main bank cut their benchmark lending rates for the first time since October, trying to pump up the economy there. What is the state of the Chinese economy here in the face of all this?
I think the Chinese economy is contracting, and we can see this from the price data for February, March, and April, which showed that the consumer price index was down for the third straight month, and the producer price index was down for like the 31st straight month. And this is a deflationary spiral. It's inconsistent with the report of robust growth. The National Bureau of Statistics did report 5.4% growth for the first quarter. That just does not seem possible in connection with a deflation.
Very interesting. Turning now to the military aspect of all this. Some are calling it a deep-seek moment for the Chinese weapons industry, with Chinese fighter jets apparently defeating some jets from the Indian Air Force. Have you been following this story, and what are we to make of that?
Yes, well, China's narrative is that its equipment is superior to the Rafale, which is the French fourth generation fighter. And it's possible, but the point is you had two poorly trained air forces go at it. And people who have looked at this said that the difference maker was not the Chinese planes or the Chinese missiles, but Turkish radar suppression devices that Pakistan was using, and that completely fouled up the Indian attacks. We'll find out a lot later as this has been analyzed, but it's not clear to me that it was the better Chinese equipment. It could very well have been better Pakistani tactics as well as some NATO equipment.
Very interesting. Since you cover tech so closely, DeepSeek, of course, was the big story earlier this year, referring to that AI startup which shook up the AI world. Any more fallout from that, and are we indeed still ahead in the world of AI?
I think we are ahead. Our margin is a lot thinner than most people thought. But remember, we're the ones with NVIDIA chips, and you can't have AI without those chips. China would like to be able to duplicate them, but it can't. Now, DeepSeek was very much in advance, but we also found out that DeepSeek trained its R1 model, which was released on January 20, by looking at ChatGPT, and that is a violation of OpenAI's terms of service. In other words, it was out-and-out theft. I think that DeepSeek probably spent a lot more money than they claimed and probably took a lot longer time to develop its model than they said, but we'll learn about that as well. Also, the other thing is that we've seen some revised models from DeepSeek, which also are very impressive.
Very interesting. And turning now to concerns about systemic Chinese Communist Party intelligence gathering on U.S. university campuses. If you had a chance to review the report from the Stanford University student newspaper reporting that a Chinese intelligence operative posing as a student there has been uncovered following an investigation into suspicious approaches reportedly made to other students conducting China-related research. What's your reaction to that news here?
Well, the Ministry of State Security does this on any campus of size where there are Chinese students. So this should not have been news. What really is news is it was news in the United States, as if this was the first time that people understood this was occurring. But this has been occurring for decades. And the big story here is not about the Chinese. It's about us, that we have known what's been going on for decades. We have the means to stop it. This is our soil, and yet we allow this to continue. So this is really a story about us more than it's a story about China.
Anything else top of mind that you're covering at the moment?
Well, I think the most important thing would be to wait to see what the Chinese economy is doing, because I think that that's going to drive a lot of China's external behavior. We saw some statistics for April, which showed that the economy continued to chug along. But these statistics, although they show a slowing of the Chinese economy, I think still overstate the performance of it.
Terrific, Gordon. Thank you very much for taking the call here. That is China expert Gordon Chang, on X, by the way, at Gordon G. Chang, distinguished senior fellow at the Gatestone Institute. His latest book, Plan Red, China's Project to Destroy America. Thank you very much for joining us live here this afternoon. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money on 790 KBC.
Actor Michael Rosenbaum, he knows some of the most talented people in the business.
Will Wheaton is here.
Getting ready to do this podcast. I text my Star Trek family. That is a supernatural impulse.
If you're here for Jay Moore, you found the right place.
Have you always had a large personality?
The nicest way anybody's ever put it. You always warn people out.
From Twilight, Ashley Green.
We were just like, no one's going to see this. This is not going to be a good movie.
I really love the movies.
Don't feel bad.
The Inside of You podcast. Follow and listen on your favorite platform.